Hello guys, and welcome to Mindset Hustle once again. This is your boy Prof, and in today's video we are going to continue with our boom and crash lesson. Okay, I told you this is going to be a series of videos that I'll make on how to easily trade boom and crash. All right guys, but before we dive into today's topic, okay, if this is your first time here on Mindset Hustle, do well to hit the subscribe button and don't forget to turn on the bell notification icon so that anytime we release a new video, you will be notified that Mindset Hustle has released a new video. Without much ado, let's dive into today's video. So now in today's video we will be looking at strong and weak points in the market. All right, so first, as usual, I will demonstrate what the strong points and the weak points are, and then after that we'll go on to the live chart and then we look at them on the live chart and why certain areas are regarded as weak points and certain areas are regarded as strong points. Now, though this is a boom and crash lesson, the same things I'm teaching you can be used on any asset. Okay, you can use this same knowledge on any asset to trade that particular asset. So don't feel like it is just restricted to boom and crash. No, it's not restricted to only boom and crash. It is made for all strategies. Okay, sorry, for all assets. Okay, so you can use it in any other on any other asset to trade that particular asset. Okay, so guys, just stay with me. Make sure you don't forward this video because this is a tutorial that requires you to watch every minute and second of this particular video. All right, too much of the talk, or enough of the talk. Now let's get right onto the lesson. So first, we will look at weak points and strong points in terms of an uptrend, and then after that we will look at it in terms of a downtrend. Okay, then afterwards we will go onto the live chart, as I said, to commence and see how it is playing out on the live chart. Okay, meanwhile, let's look at the textbook example. All right, so here you can see I've made some illustrations here on TradingView where you can see the market going up, coming down, going up, coming down, going up, coming down, going up, coming down. Two things are happening as market goes up and comes back down. Okay, one is there is a portion of the market that is still intact. Okay, it doesn't break, and then there is another portion of the market that is always broken. All right, now the portion that is always intact and does not break as market continues to move upward is referred to as the strong point, and the portion that is being broken as market goes up is referred to as the weak point. So in this case, all these areas with the white marking, okay, are the weak points, because we know that in an uptrend we are always breaking structure to the top. Okay, so the highs that are created are being broken to create what? To create new highs. So here we have this area as our weak points. So weak point. So this area here is our weak point, and we have weak point here, a weak point here, a weak point here, and a weak point. Yeah, the price have not gotten to that. Since we are in an uptrend, we are still considering that area as what? As a weak point. So if you see, you realize that as market goes up, market keeps respecting the demand zone. As market breaks structure and pulls back, the demand zones are being respected. Okay, some people, those who trade support and resistance, your support levels will keep being respected, but then the resistance levels, which is the highs or the liquidity levels, what, or the structural levels, what will keep breaking, because we are in an uptrend. So we keep respecting the demand in an uptrend, and we keep breaking the structure in an uptrend. Okay, the high structural levels in an uptrend. Now when this is happening, we say demand is in control, or buyers are in control, for for simplicity's sake. So we say buyers are in control, people will say demand is in control. Okay, so when we talk about demand, we are talking about what? Buyers. So we'll be looking at supply and demand to know where and where in the market you should what, you should be looking out to pick your trade from. Okay, so for today we are only looking at what? Weak points and what? Strong points. So this area here is what? Is a strong point. So let's just edit this guy, make it strong point. Okay, so this is a strong point in the market, strong point, strong point, strong point. Okay, why? Because as market moves up, those areas are being respected, and the more they are respected, the more we keep going up. Okay, the more they are respected, the more they keep pushing price up until price decides. So for instance, let's say price decide to break through this. Once price break through this last demand zone, then we know that now supply has taken control, and once demand is broken, automatically supply is formed, which means we will be expecting market to make a move back here and then go down, unless market breaks above this guy again. Then we say okay, then market just did a deeper retracement here. But once market breaks this guy, comes back into the created supply zone here and break structure here, then we know that now demand is back in is now sorry, supply is now in control, and demand has become what? Weak point, which we'll be looking at in the second illustration. Guys, if you find value in what I'm teaching you, do well to leave this video a like. Okay, and if you have not subscribed, turn on the press the bell notification icon for notifications, and also hit the subscribe button to subscribe to the channel. Guys, don't be stingy. Share this video with your friends, share this video with your loved ones. Let them also get the knowledge on how to trade in this market. And before I forget, the only broker that trades boom and crash is DERIV, and I'll leave a link to the official DERIV website in the description of this video. It will be the first link in the description of the video. And also, if you want to get in-depth knowledge, okay, do well to join the Captain's Mastery course, where we take you from beginners to advanced and to professional level in your trading, and we will guide you every step at a time. So contact us on Telegram. You can contact us on Telegram to make enquiries. You can use the handle at the Captain's Enquiry. Okay, you can use this handle on Telegram at the Captain's Enquiry. All right, so you can contact us, and then we will have a conversation, and you choose a package for yourself or any of our products that you would like to subscribe to. All right, guys, so we have seen that of the uptrend. Let's look at that of the downtrend, where the sellers are in control. So in this case, this time, these levels are what? The supply levels are what? The strong points. Okay, the supply levels are what? At the strong points, and these areas, the lows, now become what? The weak points. Okay, the lows now become what? The weak points. So in an uptrend, the highs become weak points and the lows become strong point. But in a downtrend, the what? The highs become the strong point, which is the supply levels, and the lows become the weak point in the market. Okay, guys, if you understand this thing, when you take a trade, you know the direction based on the structure, that market structure that we've learned. I told you market structure gives you trend, gives you direction of the market. Once you know that, once you understand structure and you know this, all you need to do is just to follow that trend and also be able to understand the fact that as you are in a particular trend, this area is the weak point and this area is the strong point. So you will always be looking to enter a trade from the hot, from the strong point, and be looking to take profit just before the weak point is taken out in the market. So in this case here, as we can see, the sellers are in control. So guys, let me check and be sure that this video is recording. Sure, so it's recording. Okay, so let's quickly go to the chart, the live chat, and let's get started. But guys, whilst I open my MetaTrader, if you are new to this channel, guys, please don't forget to subscribe to the channel, and also don't forget to leave us a comment in the comment section telling us if you like our content. If you hate the content, let us know. Tell us how we should improve upon our content that we are delivering to you guys. All right, let's get back into the video. So this is my chart on Boom 500. So yesterday we used this particular pair to do our market structure markings. Okay, and if you guys remembered, after we did the structural marking, I told you we will concentrate on the last high and the last low on the daily structure. Okay, this last high and last low, I told you we will trade between them, and then from there we went down to what? To H4, and I told you guys that H4 have a supply zone here, and we have a daily demand zone, and within that we have an H4 demand zone as well. And I was telling you guys that because we have a zone in zone, that zone is quite strong. So those of you that watch this particular lesson, part 2, and may engage on this Boom 500, you can see that you would have made profit up down up down. I told you, unless price breaks this H4 zone, then we know that surely the bulls are back in control. And also I told you that before we can continue to say we are going to continue to sell lower than this zone unless the daily time frame demand zone, which is this one, is broken. And today my private student milk this. I gave them the setup on the lower time frame. I went to 15 minutes to give them zones twice. So the milk, the first one from here, okay, up to that session, and then the second one, the milk it from what? This zone over here, okay, the where the black line is, and up to, they took profit here, but myself, I held up to this zone because I knew price was going to range between the daily zone and the H4 zone for some time before it decide whether to continue with the sell or to break above the supply zone, the H4 supply zone, and continue to buy. So I'm still keeping an eye on this particular Boom 500, and by tomorrow I'll give my students a new analysis on it and where they should go into the market. But for now, let's come back to the day's topic. Okay, so we were looking at strong points. So let me go back to my daily time frame. I'll use the areas we have already marked. So here, let's use this side where I've highlighted. Okay, let's use this downtrend, okay, to explain the downtrend. Then we use this uptrend here to explain that of the uptrend. So let me start with the downtrend. So here you guys can see that price was forming high, low, high. Sorry, this high was for this. It was breached to tell us that we were changing direction. So high, low, high. Then what do we see? After this guy went up, it didn't break this high. Okay, so this high is intact. So that high is the first turning point of all these moves. They created a new high which took out this low, making this low become a weak point. Why? Because it has given us an idea that we are changing direction, because we have a high, another high, two highs already forming, and we have another low which is lower than this guy. So guys, it means that we are in a downtrend, and this time, anytime we are in a downtrend, I told you supply zones are respected. So here you can see this supply zone respected. Here there is a supply zone over here, because this area is an area of imbalance. Okay, so that is a supply zone. But if you go onto the lower time frame, you see that there is a zone here. Okay guys, but we are not doing that now. So this high becomes a strong point, this high also becomes a strong point. Why? Because it is respecting the highs and not taking out the lows. And the more you respect the highs and take out the lows, so you can see this guy pulls back into this supply and taps into this supply here and respected it and pushed down, broke this low. So these are the high points in the strong points in this particular trend. This was why when we were on H4, I was telling you guys that we need to look at what price will do. Unless price break above, we cannot say we are buying above that supply zone, because we know supply was in control. Okay, because we are on a downtrend. If you come here and see this guy, it comes and tap this week here like this. I told you guys this is it's a supply zone. When we go down to the H4, you see that this area H4 H1, this area is is a supply zone. Price came, respected that area and pushed down. Just that here in this particular case, price has not price has not yet broken this particular low yet. It went there to retest it. It didn't even retest the exact low. It went close to it, then we spike up back into this H4 supply zone. So this is how you determine. So if you take a trade here, okay, for instance, let's say you took your first trade here, because you know now that supply is in control, you know this is a strong point, you take your entry in that area and you'll be looking to run this low. Why? Because this has become a weak point. You take your entry here, you target this low because it is a weak point in the market, but you don't put your TP exactly here, you put it a little bit above so that price can activate it. So you take your entry here, you target this low. Why? Because the lows are weak in a downtrend, whilst the highs are the strong points in a downtrend. Now let's come to the buy side of things. Okay, let's come to the buy side. So here we realize, let me minimize this chart a bit. So here we realize we were forming high, low, high, low, high, low, and then that high. So here in this case, you can see that this demand area, so you can see here price respected this demand, okay, then took out this high. What do we see again? After taking out this high, price came and respected this demand and took out this high. So here you can see the lows are being respected. Okay, here I think this demand took out this, though this demand is the responsible for that takeout. But then if you are looking at the highs and the low, we will talk about this area being the major the majors are responsible for the takeout, but it is these ones here that activated the main takeover. Then here you can see that price broke through, telling us that we are changing direction. Okay, it broke through this demand zone, price broke through this demand zone. That was what gave us, it flipped it. That was what gave us the idea that market is changing direction. Okay guys, so As I said, in what, in an uptrend, the highs are what, are the weak points, and the lows are the strong points. So in trading boom and crash, you always would like to what, would like to trade, take your entry from the strong point and target the low points as your exit. Okay, so this is one secret you guys need to what, to take home. Thank you all for staying tuned to today's lesson. Okay, I'll see you again in the next lesson. I hope we are making progress, and remember, practice makes man perfect. Okay, consistent practice makes man perfect. Have a nice evening, guys, and don't forget to leave us a comment, share this video, like, and subscribe to the channel, the most important one. Bye bye.